Schwab Asset Management is proud to sponsor the Advisor Upside podcast with ETF.com. With bond market conditions looking upbeat for 2024, Schwab stands ready with a suite of low-cost fixed income ETFs. Learn more at schwabassetmanagement.com/welcome-ETFs. Hello and welcome to Advisor Upside, powered by ETF.com. I'm your host, Jeff Benjamin, and today we're talking with Matthew Tuttle, founder of Tuttle Capital Management. Before we get into that conversation, I want to remind our audience, if you're a financial advisor, to go to ETF.com and check out the Leaders application, the opportunity to get yourself recognized as a leader in the financial advice space. Your company, your RIA can be nominated, and you can also nominate yourself. Check it out. I love the ETF space for, among other reasons, it's where I think a lot of the creativity is in financial services. And the person that I'm talking to today, Matthew Tuttle, founder of Tuttle Capital Management, is somebody that I think exemplifies that in a lot of ways. He's political for sure, but he's not only political. You can see some of his perspectives on Twitter or X, where his handle is "Go Woke, Go Broke," or you can subscribe to his daily blog, the Woke Street Journal. That should give you a little flavor of what you're getting with Mr. Tuttle. I interviewed him last fall for a story. I've talked to him several times, but in part of the conversation, when asking him about his style as a disruptor in the ETF space, and I'm quoting him directly here, without a doubt, I want to be disruptive. I'm on the back nine now with more life behind me than in front of me, and I really want to make a difference, which means taking on things that piss me off when nobody else has the guts to do so. Matthew Tuttle, welcome to the show. How you doing?
I'm doing great. Thanks for having me.
Yeah, thank you for being here. We're going to talk about a lot of the things you've done and are doing, and some of the things that were hits and some of the things that were misses, which is what happens in the financial services / ETF space. But let's first start with you, in your own words, telling us, who is Matthew Tuttle and what is Tuttle Capital Management?
Sure. And thank you for that great intro. So I am a bunch of things. I am a avid trader. So I sit around all day trading the markets. I get the benefit of also being an ETF issuer. So, number one, I have kind of my finger on the pulse of what people want or what people should want. And also I can launch products that I like to trade. Mm-hmm. My passion is coming up with great investment ideas that, have a really good investment thesis. And if at the same time I can kind of call out stuff that pisses me off or hypocrisy that I see, or, take the other side of something, then that makes it more fun. I don't, for very good reasons, I do not have a structured business plan, business model, vision of what I want to do. I launch ETFs that make sense. I enter into partnerships with people that make sense. I do things on my own, but I also do things in partnership with others.
Now, I referenced your daily blog and your Twitter handle, and we're going to get into some of the strategies that you've launched in the ETF space. But I got to ask, are you driven in your business plan, or as however structured it is? Are you driven in the stuff that you produce and create by politics, or are you just trying to rattle some cages or get things off your chest? Are you trying to do this to make money, or is it all of the above or some of the above?
No, so actually really none of the above. So first off, what I want to do is I want to launch ETFs that have a great investment thesis. I don't want to launch gimmicky stuff. I don't want to launch stuff where, people can invest according to their values. I want to launch stuff that I can sit here and say, hey, look, this is a great investment idea, and here's why. If at the same time, I can call out some issues like, CNBC bringing on Jim Cramer and treating him with deference and not holding him accountable for his stock picks, things like that, then I'm going to love to do that because I think, a lot of times either A, people just don't realize it, or B, they're afraid, so I'm blackballed from CNBC, but you know what? I think someone had to come out there and say, hey,
Right.
Jim Cramer should be held accountable and, not treated like, he's the next coming of Warren Buffett. So just one of those things.
Okay, you brought up Kramer. We're going to get to it anyway. Let's talk about Kramer. You launched, I don't know when you launched these, an inverse Kramer, which I guess shorted everything that he recommended, and a long version of that same style, going long everything that he recommended. That it looks kind of personal, but I know that you're kind of singling him out because he does draw a lot of attention. But what was the thinking behind those two ETFs? And by the way, I think they're both closed now, right?
They are both closed. The thinking was really simple. I believe the consensus is usually wrong. So investors can do well fading the consensus and taking the other side. Jim Cramer's the consensus on steroids. He's out there buy when something is up. He's out there sell when it's down. So from a pure investment standpoint, I thought and continue to think that was a great idea. Also the way that, he was portrayed, pissed me off. So, that certainly helped. A lot of times, or most of the time when you're doing an ETF, timing matters. And in May of last year, before NVIDIA's earnings, Cramer started pounding the table for the Magnificent Seven and never got off it. So, hard to run a product where you're short those names, especially NVIDIA. So it is what it is. Now I've got another idea to fade the consensus that I think is even better, that we're working on. So we'll see. I still think that's an investment strategy that fits in your portfolio, and I'm just thinking of another way to do it.
Okay. Do you see yourself and Tuttle Capital Management as a disruptor in the ETF space? And is that the only way to compete in an ETF space that's dominated essentially by three companies that have basically captured all the beta out there for almost nothing?
Yeah, so let me take the second part first. It's tough. I mean, we're in a very top-heavy industry where you don't want to be competing with, BlackRock and State Street. That's just stupid. So, there's a little bit of kind of blue ocean left over for the rest of us. And, again, my goal is I want to have a great investment strategy, but there's also got to be enough buzz around it in some way, shape, or form that you're going to be able to get noticed. And that part is tough. So then going back to the first question, in a lot of ways, yeah, you really do have to be a disruptor. I have so many people, because we launch ETFs for other people. Once a week, someone will call me, hey, I've got a strategy. It beats the S&P. Let's launch an ETF and we'll get billions. I'm like, no, you won't. There's no buzz to that. It's just not going to work. There's got to be some PR angle where people like you are going to pick it up and be like, oh, wow, look at this.
What are some of the ideas that either you've come across or had on your own that were just like, it's really fun and exciting, but I don't think it's going to work?
Typically, if I come up with an idea that's fun and exciting, I think it will work. It's those ideas that are really good from an investment standpoint that you just don't know if there's enough buzz around them. So, I've got an idea that we back tested and it crushes it for an alternative to the Dow 30. I call it the new Dow.
Okay.
And I'm just going back and forth. Is there going to be enough buzz around this? There's some things around AI that I think from a pure investment standpoint make total sense. Are they areas that BlackRock and State Street might ultimately get into? They are, because they make so much sense. So I'm kicking that around. There are things around managed futures that, again, make a ton of sense. But is there going to be enough buzz? So, things like that go through my head constantly. I have so many good ideas. I'm just not sure the viability, again, being a smaller issuer, that we'll be able to make them work.
Single stock ETFs. It's only been around for less than 2 years that these things are out there. They're obviously they only make sense if you do something to them. Otherwise, somebody can buy the individual stock. So they're usually leveraged a couple of times long or short. This seems to be kind of almost tailor-made for somebody like you. Where do you see opportunities there, and where have you already gone?
Yeah, so I mean, we've already gone to the obvious, which is NVIDIA and Tesla. We just did Bitcoin. So yesterday we did BTCL and BTCZ, which is 2x long and 2x short Bitcoin. We've got some other names in there. I think there are opportunities beyond Tesla and NVIDIA. What are the next popular stocks? So, we sit around and rack our brains. We just filed for 42 or 44, long and short. So, 20 to 22, I don't remember the number, new names. We're probably not going to launch all of those, but, once those get approved, we'll sit back and, hey, what's popular out there? And luckily for me, again, I am a trader. I know the names I like to trade. And, and I talk to retail traders all day on Twitter Spaces, on Discords. And I tell them, look, hey, if they're names you like, run them by me, or ideas you like. So my new Dow came from a guy on Twitter. He hit me up with that idea. And I was like, wow, I really like that idea.
We kind of glanced at this a minute ago, talking about referencing Vanguard, State Street, and BlackRock as the big three in the ETF space. And obviously, there's a lot of ETF issuers out there. There are some smaller than your firm, some larger. How do you compete in the ETF space if you're not one of the giants? Does it have to be these creative strategies and ideas? Or, I mean, because you don't have marketing muscle, you don't have a brand name. If you're launching new stuff all the time, you don't have a track record. I got to assume your fees are going to be a little higher because you don't have the economies of scale. I mean, what's it like in that kind of position you're in?
Yeah, I mean, it's tough. I mean, we've been able to amass 1.4 billion, so I'm not complaining in any way, shape, or form. You've got to you've got to look at where you've got advantages. So I've got advantages in that I'm creative, and I'm nimble. Things don't go through a committee. I wake up one morning and I come up with an idea, and we're filing in a week. I don't have to worry about pissing people off. So, I've got Kathy Wood out there calling me un-American. I've got, I'm blackballed on CNBC, okay, whatever. So, I've got to look for, where are the places those big boys can't go? And then, from a distribution standpoint, where do you have an advantage? And I think I've got an advantage with retail investors. Self-directed retail know who I am from some of the products that I've done. And I communicate with them all day, every day. BlackRock, State Street, Vanguard, they don't. They've got to lock and load with financial advisors. So I'm not going to bother trying to get stuff into Merrill Lynch or, UBS and compete with them head to head, but they can't compete with me on the retail side.
It's Jeff here from ETF.com. If you want to hear about the world of ETFs, make sure to also check out Exchange Traded Fridays. available wherever you get your podcast. Where are you with financial advisors? That's as I'm sure you know, the largest buyer of ETFs based, again, that's a volume play. Do you have any outreach to them? Do advisors ever reach out to you? Do you feel like you have any market share there?
I doubt it. I mean, but we will. We've
Mm-hmm.
got a couple of buy and hold ETFs. And again, I love to work on products that make a lot of sense. So we've got BWTG, which is crushing the market, and an investment strategy that there's just nothing like it.
Well, what
Uh,
is
you
it?
know,
Tell us about it.
yeah, so BWTG is Brendan Wood Top Gun. What
Mm-hmm.
Brendan Wood does is they survey the top money managers, family offices, hedge funds out there. And they do massive surveys. But one of the things they ask these guys is what stock or stocks do you plan on buying more of or buying for the first time over the next few months?
Okay.
And they compile all that data and come up with the 25 most mentioned names. And so, there's nothing like that. I mean, I can look at a 13F and see what the top money managers held 45 days ago, but there's no way for me to look at something and see, hey, what are the top money managers going to own in 3 months? That's
Uh-huh.
what that fund does. So that's going to play in financial advisors at some point. We're going to start ramping up there. We also have TGLR, which is Nancy Tangler's equity income strategy. You can't turn on financial news and not see Nancy Tangler. But she's also one of the only, if not the only, talking heads on media who knows what the heck she's talking about. And that's been a great strategy. And we're seeing flows in both, and I'm sure we're going to see that go up. We also do a free model portfolio for advisors. It's up on my website. At some point, we'll start marketing that because I look at asset allocation differently.
Uh-huh.
So we'll get there. But we've been doing so well with the single stocks from a marketing standpoint that's taken up a lot of my time.
Okay. I want to talk about the Rex Shares partnership. That's relatively new. There's a lot of activity there going on. I think that's your single stock business that you're talking about. Tell us about the partnership, and then we'll see where that's going.
Yeah. So in one of the things when it comes down to competing against the big guys is why should all the little guys compete with each other?
Mm-hmm.
So, I was involved in the first single stock launches, planned on doing some single stock launches. I knew the guys at Rex, they were planning on doing it as well. It was just kind of like, hey, if we work together, 1+1 could equal 4. Why launch the same ETFs and compete with each other? Just
Mm-hmm.
doesn't make sense. So we joined together, and it's been great. Stuff they're strong in is stuff I'm not. Stuff I'm strong in is stuff they're not. And it has been a true 1+1 equals 4. And we plan on doing more with those guys. But we've also got partnerships with other people. I mean, again, Nancy Tangler, Brendan
Mm-hmm.
Wood. Most of our ETFs are in partnership with somebody else.
Okay. We kind of glanced at this, but let's talk about some of the hits and misses. What do you feel like are your biggest success stories in ETF launches? We'll start with that.
Yeah, so I mean, Sark was a huge success. We got that up over 500 at some point. Not
Mm-hmm.
involved in that one anymore. And Kathy's I mean, she's obviously not done well unless losing people money counts as doing well. But she's been out of the news lately.
Mm-hmm.
We did SPCX, which we still have. It's our SPAC ETF. Got that up to 200 million in the first 3 months. Obviously nobody cares about SPACs right now, but that did really well. And right now it's NVDX and TSLT, the 2x long NVIDIA and the 2x long Tesla.
Mm-hmm.
So those are the biggest successes. And the biggest failure are the Kramers. And
Mm-hmm.
again, timing. If
Right.
we had launched those at the beginning of 2022, I'd be sitting here with $1 billion in them.
Right.
but we launched them right before the Magnificent Seven, like tripled.
Is anybody trading those the inverse versions of Tesla and Nvidia?
They are, and in what I like to see, because I'm a mean reversion guy.
Mm-hmm.
So what we'll typically see is on days that Tesla or Nvidia are up pretty big, we'll see
Mm-hmm.
inflows into the inverse. So with the ramp up we've had in Tesla, we're kind of at a high watermark now in Tesla Z, which is our inverse. We're at 86 million in that at the moment. And we had outflows today. We were at 90, but we had outflows and we had inflows into the long side. And I think it's the smarter retail guys who realize you don't chase these names, but you buy the dips.
Mm-hmm. Talk to me about the Woke Street Journal. Obviously, it's a play on the Wall Street Journal, but what are you offering there, and what are you accomplishing or seeking to accomplish?
So one of there's a couple of things there. Again, going back to my thinking that I like really good investment strategies and I really don't like bad ones. To me, investing is about making money, full stop. And at some point, and I don't know when, it just kind of snuck up on me. Companies went from being there to service their shareholders to being there to service stakeholders. And stakeholders was defined as, not just shareholders, but, the environment, the country, people, all of this stuff. And
Uh-huh.
if you think about it on the surface, well, yeah, a company should be doing things to benefit society. That makes sense. Except who decides what benefits society? And we live in a society where we don't agree on a whole heck of a lot. So if you tell me, hey, a company is doing stuff to lower murder rates, I think we can all agree murder is bad. So, all right, that's a good thing. But, beyond that, there are a lot of things that we don't agree on. So unless God is the one deciding what benefits society, to me, I think a company's role is to benefit their shareholders. When
Mm-hmm.
you invest in a company, you invest in it not to change the world. You invest in it to, fund retirement or pay for your kids' college. But we've got these companies out there now, and I think they're being pressured in a lot of ways. Some by, some of the big guys, BlackRock, State Street, and Vanguard, and, in political groups to go out there and do things that, elected politicians can't do at the ballot box. And I think that's wrong. But nobody has the guts to really call that out. So that's what the Woke Street Journal is about. I'm reading the news on this stuff every day,
Uh-huh.
and and I summarize it and put it together in there. I do 3 newsletters every day. I do that. I do financial news versus noise, which is my trading one, and I still track Kramer, and I tell you what he tells you to buy and sell every night. It's a
Okay.
tough job, but somebody's got to do it.
All right. All right. What's next for you guys? For you, I should say. Tuttle Capital Management at all. I know you've got all your partnerships. So what do you got on the drawing board? I know you've got a bunch of stuff in filing. I've written about it. But can you give us any kind of a glimpse into the future?
Yeah, I mean, I've got a 2x AI under 500 billion in market cap.
Mm-hmm.
So it would be the only AI ETF that doesn't have NVIDIA and all the FANG stocks. We'll probably launch that within the next couple of weeks. It's ready to go. I've just been so busy on other stuff. We have more single stocks. I have my 3 anti-ESG ETFs that, we're having censorship issues on. But I think I found a workaround, so I'll be able to launch those. We've got some things coming in partnerships. We have a European defense stock ETF that could be interesting.
Uh-huh.
We've got a relaunch of an ETF that I think will be really interesting. And then a bunch of stuff on the drawing board that I'll either decide, hey, we're going to do it or not. And, and people come to me with partnership ideas all the time. So I talked to 2 people this week. about ideas they want to run with, that if they decide to do it, we'll do those too. I like them. So, yeah, I think that the future will be interesting. Again, we're going to continue to be nimble. There's not like one area where I'm going to say, hey, we're going to focus on this. I'm going to focus on whatever makes sense, and whatever makes sense is, what I run into or talk to somebody about tomorrow.
Is there area you can think of that you decide I won't go into that area? That's not interesting. It's not going to work for me or my company.
I mean, anything that's competing head to head with the big guys, or anything that's just totally out of my core competency, where I can't speak about it, or anything that's just not a good investment strategy. I mean, anything where I wouldn't say, hey, I'm going to put my own money in it, then I wouldn't do it.
Yeah, now, you launched your firm, was it 2015, 2016?
So 2015 were our first ETFs. My money management firm, we launched in 2012.
Okay. Is there any lesson that you could impart on people that you've learned in the ETF space, or lessons for either an investor or an issuer or both?
Well, I mean, for an issuer, yeah. I mean, don't get stuck into a rigid business model and try to brand yourself. I see people try to do that. And in the buzzword now is innovative. And I used to be a financial planner. And when the first financial planner called themselves holistic, it was cool. When everybody tried to call themselves holistic, it was stupid. So, you've got people trying to brand themselves. Again, unless you're BlackRock, State Street, or Vanguard, you don't have the money or the pull to brand yourself. And, in sticking to a rigid business model, you're going to miss opportunities. If I had stuck to, if I had stuck to the business model on the ETFs I launched in 2015, I wouldn't be where I was today. You got to be nimble. You got to pivot. So that's the advice I give a smaller issuer. And then, and it's all about marketing. Again, I have so many, every day, someone's bringing me something and I've got to talk them out of it because there's no, and in our platform, I mean, I only need 15 million to break even. But I have people call me. It's like, dude, you're not even going to get to 15 million on this. You're going to be at 250,000 a year from now. It's just not going to work.
All right. Well, Matthew Tuttle, really good stuff. Really appreciate you coming on and walking us through it. I want to tell the audience, you keep an eye on this guy. He's got all kinds of interesting ideas, and the stuff he comes up with is always interesting, even if it doesn't always succeed to the fullest extent. But thank you very much, Matt, for being here.
Hey, thanks for having me.
All right. Thanks again, Matt. And thank you all for listening. I want to invite you all over to ETF.com to check out all we've got going on there for financial advisors and investors. Check out the Advisor Center. We've got a lot of stuff going on over there with advisors doing some of the writing, contributing things. We've got this new thing we just started called Portfolio IQ, where we're getting an advisor to share his or her own personal portfolio for you to check out. Model portfolios, everything you want. Check it out. If you need to find me, my email, jeff.benjamin@etf.com, or find me on X. My handle is @BenjuWriter. Talk to you next time. Schwab Asset Management is proud to sponsor the Advisor Upside podcast with ETF.com. With bond market conditions looking upbeat for 2024, Schwab stands ready with a suite of low-cost fixed income ETFs. Learn more at schwabassetmanagement.com/welcome-ETFs.